Mark Sommer, Munis had a tough year in 2013 due to the taper talk, but they're bouncing back in 2014. Do you stick with them?
I think Munis have really surprised people this year. I think some of it is just issuance has been down. People have expecting issuance to pick up since the financial crisis, and it's down like 25, 30% each year. And then on the flip side, you have people filling out their tax returns, and they're seeing that taxes have gone up in 2013, and Munis have become a lot more valuable.
What about yields? It's hard finding yield anywhere in the financial environment. You get enough for your money, or should you just take your money out and put it into stocks where you have a whole lot more fun?
Well, I think relative to the tax point I was making a second ago, 2.5%, 3% yield tax exempt is equivalent to 5 or 6% on a taxable. You have to buy taxable bonds at a 5 or 6% rate for them to be equivalent. And I think also people are buying munis for other reasons. They're buying munis for diversification, for their relative safety, and they're looking to munis as being kind of the flight to quality asset now.
Speaking of quality, do you think people are past the scares of Meredith Whitney, of Detroit, of Puerto Rico, which came to market, actually sold some bonds?
I think we're in the throes of that right now. I think you can add Detroit to the list, and to a lesser extent Illinois and Chicago. I think munis have always been, because there are 60,000 issuers, you have an asset class where there are a lot of fires sparking up here and there, and they've been more pronounced in recent years, probably do a lot to the economy. I mean, that's why at Fidelity we have such a big research team, because to cover that broad set of credits, you need kind of a research intensive process, and we have that at Fidelity. I'm not sure I'd want to go it alone. And
what are your favorite credits right now? Do you like GOs? Do you like revenue bonds? Do you like states? Do you like sewers? What do you like?
Where an area that we've been very focused on is healthcare. I think that surprises investors sometimes, because all they hear about is Obamacare and the startup issues that they've had, and the troubles that healthcare providers are running into in the face of healthcare reform. But one of the interesting dynamics in that sector is consolidation. So you have weaker hospitals who are looking to stronger partners, either for capital needs or because they need more leverage with insurers in trying to get better pricing. And so you see this consolidation, and when you buy the debt of some of these consolidated, the acquirees, you can see big price gains from those types of investments. So that's an area that we've been spending a lot of time on.
Can't beat gains. Thanks a lot, Mark Sommer.
Thank you.
Thank you for watching The Street.